know what that means. And yeah, so I think we're live. So it's just really to show, I think, the rest of the people what's going on, and also kind of spread the message to you and your friends and who cares about the economy and what's coming and stuff like that, right? So yeah, we'll definitely get started. So I think the first thing I'm going to do that's a little bit different than my typical for the last couple of weeks is that I'm going to have more focused material. Instead of go blitzing through the different news and all this other headlines and go into detail about them, it's just too much time. I don't think it's worthwhile. I think I'm going to focus on really talking about my perception of gold, the market. We're going to focus on charting. That's the feedback of what everybody want me to get through. And I'm just going to highlight some of the things that you guys want to take a look at or should take a look at for your own good, so to speak, and highlight some of the news that were just literally in the last 48 hours. So can everybody hear me and can everybody see my screen?
Yeah.
Yep.
Perfect. Okay, so the first thing I want to tell everybody is I got my first YouTube channel. There's only like 3 videos on there. I think this is the 3rd one I'm going to upload. But what's important is I want you guys to just subscribe to it by clicking on one of these buttons. I forgot what it is on your side. It'll be like here. And when you do that, then you'll be notified of all the future videos I'm going to put on, so that it's just easier for you. And what's surprising to me is that I got like almost 200 views. I thought it was only going to be like 10 because, only told 10 people about it personally. But I think people started, they're either really bored or this is really interesting to them, which tells me more. It really means that, people know that there's a problem, but they can't really explain it. So I'm here to just trying to demystify a lot of it, and so far I'm just going to keep going here. Now this week, again, I'm just going to briefly go over the numbers, and again, this is a site that I always go to. It's called Forex Factory. I'll give you the links later, but at a glance, this is what I like to look at on a week, and just give me the numbers, right? Some of the focus numbers that I go through are like consumer confidence, GDP. It's negative growth, obviously, in terms of the states. And what that means is that it's only the first quarter that they've, remember, 2 quarters back to back is negative. It means we're in a recession, but you don't need to know, you don't need the numbers to tell you that. We're already in one, right? But these numbers are negative indicators. So this is just January, February, and March, right? And remember, it was only March, the 2nd week of it, that we started locking down. So this will be a lot worse in Q2. I look at things like, for example, home sales. Of course, it's going to go down, right? I mean, nobody's going to buy houses anymore in the States, and the numbers will typically show that. I look at things like manufacturing, right? So anything below a 50s contraction, right? They're making less. Nobody's spending. So I look at non-manufacturers. These are more like services and stuff like that, right? So again, just because it's green doesn't mean it's good. We typically have like, on a regular, it's like in the 70s or 80s and stuff like that. But so that's a big deal, even though it's like green. But you can take a look at things like, it's the Spanish, like the European side. I only focus on, the top like tiers of economy, right? Which is the Euro, China, US, and a little bit Canadian because we're here, right? And Canada's no different. We're at like flat for the first quarter, and I expect that to be negative. U.S. unemployment, it's at 3.8 million just for last week claim, bringing the total unemployment to 30 million people in the U.S., and that's 10% unemployment for reported. Okay, there's a lot more that's unreported, and I talked about that in my last video. But that's, again, just a little bit of a quick snapshot, and that was last week, and I don't think this week is any better. Like there's more to come because we're only on Tuesday. These are again like not great. Like if they're under 50 means it's contracting, which means like we're producing less goods and services. Switching gears quickly here to real estate. I think everybody loves real estate, and so I'm just gonna. The numbers are out as of today, so I quickly want to go through them. No surprise here, right? Look at this drop in the cliff, right? From March to April means less homes are being sold, and this is just concentrated in the Toronto market. I'm outside. I'm in Brampton, but I look at like the Toronto market as a barometer, right? So you're talking about like a 62% decline in sales, which means that people are either inside because of COVID, or they're just not wanting to buy a house because they're unemployed, or they're just not sure about the market, or you may have guys like me that are just like, I think it's going to crash a little bit more, so I'm just going to wait on the sidelines and hope get a really good deal. So if you, depending on which spectrum you are, and if you care about real estate, those are the things I look at. I look at active listing. Obviously, there's a lot more. than previously. And I look at average price, right? You can see that's a $80,000 discount from your average, you know, from that of March. And I foresee this will continue to go, right? So I don't know if you guys want to talk about that, but I'm just going to keep going, and then we'll have a Q&A, and then everybody can discuss some of these numbers if you like to talk about real estate. I don't think this is any different. I just pulled that 2 seconds ago, but it's going to continue to fall. If you're a renter, condo, you know, you just have to wait until if you're a buyer, just wait. You know. And lastly, I'm just going to end up in these two things for just Canada related. I look at inflation. So obviously, in my last video, we were talking about inflation versus deflation and what the differences are. And this is a deflationary aspect of things where you're having less of inflation. Though typically, you know, if the Feds and everybody says is around like 2% for inflation, but you can see that some of the numbers here, it's 0.9. Why is it a lot lower? It's because nobody's spending, right? Like even if the Fed and the US side, they print a bunch of money, it doesn't mean that you take that money and you go baller it out, right? Most of the time, people, when they get money in a desperate situations, they hide it under the mattress, they pay off their debts, you know, they pay off like things that they own, right? But remember, when you pay off debts and when you put into savings and stuff like that, you know, you're not putting it back in the economy. Putting in the economy is basically you spending that money to buy a latte, and then that person who takes that money that you got a latte from, they buy something else, and it's like this chain, right, or this wheel, like Ray Dalio says in one of his videos, in terms of how goods and services are being produced, or should I say the velocity of money. So when you see the velocity of money pick up, aka everybody's back to work or at the best of their ability, back to consuming, going to the movies, going on jet lines, going to watch a Raptors game, you're going to start to see velocity pick up. And then that's when I see things like inflation pick up, right? So when we get there, we'll get there. But right now it's on a deflationary environment in both like the Canadian inflation and also food inflation. It just makes sense to me. For those of you guys that are looking at the Mike Maloney videos, you're going to hit deflation first and then inflation after. So it kind of speaks to that in terms of the real data. Okay. So I think that's it. I don't want to talk too much on news because you know, I just want to focus on the Q&A today. And you know, I can do charts and stuff like that. Give me 1 second. You know, I can do technical analysis, I can do Q&A. And maybe what I can do is I know that some of you guys have a list of questions and stuff like that, so I'll open up to the floor. But I have a friend that was asking me. Now we're going to shift gears a little bit into gold. That's really my specialty. And you know, my question was asked. Sorry, Bobby was asking the question about the miners in regards to why is it risky, right? So, and again, if you've been following the videos, you know, there are ETFs that do mining companies or individual stocks, right? Individual stocks, you know, you can do the juniors, which are the exploration companies, and the seniors that are basically the developed companies, right? So to answer his question fully, there are the junior miners, and what they do is they do exploration, right? So I think I answered this before, but I'll answer it again. The explanation is these junior companies, they're exploration companies. They find locations on planet Earth that have rich mineral deposits. They fly a team over there to do geological surveys. They get all the permits. They make sure that the site is near road, near river, near electricity. They're the ones that actually do a couple of samples, dig right into the hole in the earth, extract it, get some geological physicists to take a look and see whether or not it's a percentage of gold, silver, copper, cobalt, like whatever you find. And that's all they do. They explore and they discover. But these companies are usually the riskiest because they're the juniors. It means that it's like a FDA drug, right? If you have a drug and it doesn't pass FDA, you're screwed. You have nothing. Like your company's worth nothing, right? So these are the high risk, high reward ones. And usually these juniors are like traded as a penny stock on the TSX venture. And usually there are a couple of pennies, and you know, like they have a market cap of maybe like 10 million, and that's it. Literally, you can buy them out with if you have 10 million on hand, which is not that much if you think about it. Like owning a Tim Hortons franchise is $1 million if you think about it, right? So it's a very small cap, and that's why the gains are explosive. Because if you, let's just say you spend $1,000 and everything is like a penny, then you have like, you know, the 100,000 stocks or whatever, and even if it goes up by 1 penny, which is like, then you just doubled up, right? So that's the benefit of them. But the seniors, they're a little bit more stable. These are, the ones that you know of, like I said before, Kinross, Barrick, and Agnico Eagle, Franco Nevada. These are the guys that have offices downtown Toronto, and they have billions of dollars in liquidity. They can storm a bad storm like this, and all they do is usually they fund companies like the smaller ones, buy them up, and they operate. They're like an operator, right? So and these are the guys that have the capacity to do more with them, because remember the usually the discovering companies, all they do is they find gold and that's it. They're all their life they wanted to do is get bought up by either like a royalty company, which I'll talk about later if you guys are interested, or senior miners like if I'm Kinross, right, or if I'm Barrick, right. And what I do is I take that and I buy the property right out from them, and I do my install teams, right, which is I get the infrastructure in place. I make sure it's connected to whatever, right? And I dig. Like these are the videos that you see online, which you see like these tractor trailers of like they're monster trucks, and they go in and they dig and they do all that survey. They get it from the earth. They make sure it's in a proper form. They refine it. They get rid of all the impurities, and then they send it to the mints, right? So these are the refiners. So that's why they're called seniors. They do a lot of different services, but they're well equipped, well liquidated, but they don't buy a lot of juniors. They pick really good sites and they buy them up, but only the good ones. So that's the difference between juniors and seniors. So in terms of ETF, if you're looking for the ticker, the juniors, JNUG, JNUG, and like this one. Oh, actually, I'll talk about that in a second. But JNUG is the ticker symbol. You notice that if I were to do side-by-side comparisons beside, like a senior NUGT, right? You'll notice that whatever this guy goes up in, like 2%, let's just say, this would probably like 4%, right? So, sorry, juniors are usually more explosive than seniors, right? But again, it just depends on the situation. But that's the difference between junior, JNUG, and senior, NUGT. So that's my first question. Maybe I'll just give it to the floor. I think you guys have a couple of questions for me, right? In terms of a gold or stocks analysis or anything in between. I think you guys are on mute. Hello? You guys can hear me, right?
Yeah, we can hear you.
Yeah.
Yeah. Ray, did you guys have...
I can't think of anything right now, so if you have anything else on hand, just continue.
Yeah, I do. Is there any specific for Junhan Eris before I keep going? Otherwise, I'm just gonna free flow it.
Yeah, free flow. Can you hear me?
Yep.
Yeah, let's free flow for a little bit. I'm trying to gather some information here. I'm kind of new to this.
Yeah. Okay.
For me, it's all about technical analysis. I'm not sure where you learn your fundamentals and how you come up with what to look for and all that.
So let's start from fundamental, and I'll move into the technical analysis, because some of you guys, so when you guys think about the stock market, there's many different bodies of knowledge that you must understand in order to get the full picture of what's happening, right? The first one is just stocks in general, the technicalities, the mechanics, like what's the stock market, what drives the price, what's the bid-ask spread, like all the technicalities, how you physically trade without understanding what's beneath it, right? You need to understand of stocks and understand that first, and then you can go into more complex things like options, futures, forex, and all that stuff. But I suggest you just learn about that first, about like what is the stock market, what drives price, what's float, what's liquidity, how many shares outstanding, what do I look at, right? So, that would explain things like, price action, volume, how many times has it went over, and that's the first part. The second part, that if you guys were to look at interest, or should I say, in terms of fundamental analysis, and again, the stocks part is the first part. The second part is the fundamental analysis as to what into like basic balance sheets, right? So I'm talking about, I think I taught. Let's just pretend here, Canadian Tire, right? So SEDAR is basically the Canadian filing commission. So SEC is like the US, but basically there is all the regulatory forms that they have to fill. And I basically go into the latest financials, or should I say MD&A, MD&A is basically a combination of give me 1 second. I'm just copying whatever I see here, so I'm not a robot. How I would evaluate a stock, right? So a lot of people are saying, give me a stock thing, and I'm like, no, you got to figure it out, right? So you got to read what this company, and when I say fundamental analysis, it's not just what the company does, what are the goods and services, what is their sector, how good is their management team, how many years of experience. But I look through things like this, right? The financials, right? I look at things like revenue, net income, total assets, EBITDA, and all that other stuff. And again, all this stuff you have to learn, right? I mean, how to read it. There's a couple of books online, and also lots of YouTube videos. But typically, things I look at in terms of reading balance sheets are revenue, gross, cost of goods, how much debt do you have, basic EPS, or the earnings per share, cash on hand. I want to know the financial strength of the company. Now, it depends on like different companies. So, for example, Canadian Tire, liquid company, well established, many different years. You compare this against like marijuana stocks. Good luck, right? They have no money. They have nothing in play. They can't even like get any revenue. So it's a totally different thing, depending on which sector you're looking at. But it still doesn't diminish the value of knowing how to read some of this stuff, right? So, you know, for example, Canada Tire is a it's a retailer. So you want to take a look at the cost of goods sold, how much revenue in terms of the dollars per the retailer or their per franchisee, gross profit, and also what other brands they own and stuff like that. So if you're a bottoms up person, I would start here, right? In terms of understanding what the financials are. So for example, it's like what, $333 million for this quarter. And you had kind of, for example, oh, okay, well, it looks like you're about the same. You grew a little bit in 08, 18 here, and you kind of maintain flat, right? So that's like the 10 seconds of just reading that line, but I look at all this other stuff as well. So going through that will give you a pretty good idea of where they stand and are they net positive, right? Because you're going to have a lot of companies, for example, like marijuana, that are not positive. They're bleeding cash left, right, and center. And all they give you is like a unicorn and a dream and hope that you're going to continue to give them money, but they burn through cash very quickly. And a lot of them are just scams, right? So you have to weed these out by reading this because nobody looks at this stuff, right? Your Robinhood people, your millennials, they don't care about this stuff. And that's where they get burned the most. So to me, this is probably one of the things that I look at. Okay. So that's the quick and dirty 5-minute fundamental analysis. And again, you know, like there's a whole course on lots of books. I'm not gonna talk too much of it already, but you know, you can go through that and read up on your own in terms of what I would look at for balance sheets and stuff like that, right? And then the next part is the other aspect of it, which is the technical version, which is also probably pretty, like, it takes a long time as well, just because, for example, you know, some concepts, it doesn't mean how you can tie it all together, right? Like all this stuff is both an art and science, and you know, without losing money, you won't be able to learn, as it's what Brian and I was saying. So try it out, and you know, for example, how I would take a look at this is it depends on what I'm looking at, right? So for example, the first thing I do is bring up, let's just pretend I'm doing gold, right? And the reason why I want to have it do side by side is because I want to make sure I have a counterparty that I compare it against. Why am I doing it against the US dollar? Because they're inversely related to each other, right? So these connections, nobody's going to tell you, and technically won't tell you anything. You just have to figure it out on your own to be like, well, what is US dollar related to, and what's gold related to? So if I were to do gold, for example, give me 1 second here. Where's all my trend? Sorry, give me a second, guys. Let me just go back to my original gold thing here. And I think one of your one of the questions out there was, do I like trading view? Do I like Quest Trade? It doesn't matter, right? Because it's just a tool. If you guys don't know how to do technical charting and stuff like that, it's irrelevant what the tool will provide you, because it all depends on your skill level. So the more you do it, the better. And, you know, it's just a matter of what the tools are. But let's just, again, put it up on a road here. I'm just going to do a quick gold versus DXY session here. And the first thing I look at every chart before it gets started is take a look at the general direction. the general direction that I always take is take a look at a really backward looking weekly charting session where I have to take a look at the macro. I like to go far and then zoom in. If you just do an hourly or 5 minute or 15 or 30 or a day, it just doesn't give you enough. You have to switch to multiple things here. So let's just start with maybe, you know, I'll go in deeper into gold, but maybe I'll secondly, but I'll do the dollar first. So what that tells me in terms of a daily, maybe I'll talk weekly, is that if I were to start weekly, it doesn't look like it's doing much, right? So a couple of things here. I notice there's like a little bit of a pincer thing, okay? It's traded in a bound between, you know, high, low, and it's just everything else is an inside bar at this present moment, which means that right now it can't make up its mind. That's what it's telling me. On the daily chart, I zoom in, and it looks like there's more equilibrium bar lines happening. So between these 2 points, which means, again, the market can't make up its mind. But I would look for more of an action when it becomes a little bit closer on the pincer, or when it goes high. Like there's a couple of scenarios what could happen, right? So it can either keep doing this indefinitely, or it gets to here because it's smaller, if a smaller channel than this one, and then it breaks up or breaks down. It depends, right? So what the market dictates it, and gold will correspond to that because they're correlated with each other. When it goes up, the first thing that you have to notice is that, you know, is it going to go through just this one and it just tops out? If not, then it's just range bound. And the second scenario is if it goes through, breaks through it, is it going to break through this one as well? Or is it just going to mean that I'm going to continue to go back and forth in this channel, right? It really depends. On the daily chart here, it's not trending because it's under 20 on my ADX. It's just another indicator. On my RSI, it's not telling me much other than it's you know, it's in the middle of trading between these two bounds, like I was mentioned before. And MACD is not giving me any strong signals, so I would not trade the dollar. It has to make up its mind right now. Let's see, and I'm gonna continue to go shorter because again, shorter time frames, they start as short and then they get longer and longer and longer and they break outward, right? So the hourly, is it any different? Well, yeah, you can say that, for example, on the hourly, the trend lines have already been broken here. So that would have been a good trade if you were to, let's just say, if you on the bullish side, you would, you know, took the bottom right here as your buy-in, and then it would have been a where's my thing here? Where's my oh, okay. So yeah, higher high, higher low, higher high, right? And it's gonna find its higher low here, right? So it looks like, why is that higher high? It's comparison with the last you know, dip. So higher high in comparison to this, higher lows in comparison to this, higher high in comparison to this, and it's trying to find a higher low, which has not been established yet. So it can either be like a bullish flag here, or it can continue to keep going, or it just ignores and just goes to the lower high and go a lower high. So again, indecision, not going to trade it. That's what I see about US dollar. That's all the procedural stuff that I would do. Switching gears to gold. Again, I start with the weekly. Now, what I do know for this one is that it is on a bull market. Why? Because it's lower high, lower low, right? Higher high than this one, lower low, higher high, lower low. So okay, that tells me on a weekly scale, on a longer time frame, I'm in a good shape because I want to trade with tailwind, not with headwind, right? That's why I you know, I pick the stocks or whatever that I do want to have a tailwind in, and I continue that route. So weekly just tells me, is this in a bull market? And the answer is yes. So now I'm gonna go a little bit deeper, right? What does the daily show me? The daily shows me is that for the last, since July, it's been on an uptick, relatively speaking. There's a clear channel here. There's a couple of it. Went through a couple of you know, weeks of uptrend, and then it consolidated, and then it went up again. And then now what it looks like is that it's in an equilibrium environment, right? So it's trading between this line. And what I like to see is that it gets tighter and tighter and tighter. You can tell that right now here, it's a triangle, right? Which means that when it breaks, it's going to break up and down rather violently, which is good, which is what you want in a volatility environment. So given that it's a bullish triangle, you kind of notice that for those of you technical traders, it just simply means that it's going to continue to follow the trend before, which is an uptrend. And then what it's going to most likely or can happen is that it's going to go this and it's going to respect the smaller and smaller triangle, and then it's going to spring forward upwards or spring downwards. So that's going to be either that or either that. So that's what I'm going to be looking for. But this is at this point, that's where I'm going to have to make my choice, because it looks, it's continuing to respect that in a daily time frame, right? So for the last like couple of days, right? So which is good. Most likely, if I was to do it, I'm going to continue my thesis, which is bullish on gold. So, but I would also have to take a look at the U.S. because in order, again, gold and U.S. dollar. Why? Because U.S. dollar is the global reserve currency, and most people pick it as a defense mechanism, right? So when people do not trust gold, do not trust U.S., they go into other defensive assets, right? So things like Swiss franc, Japanese yen, English pound, and gold, right? The difference between the two is I hate paper currency because you have counterparty risk, which is, and for those of you guys that have already read like Mike Maloney and stuff like that, your counterparty risk is the government IOUs, which they could just say, no, I'm not going to pay you, right? And then you're screwed. So that's why, and also all countries right now, they're depreciating their assets, or they're depreciating the currency by limitless amounts of money printing. So that's one of the reasons why I would never hold like paper. So gold is a lot better because it's hedged against all currencies, and there's no counterparty risk. There's nobody on the other side, like the government. Like if I were to hold like U.S. dollar, it means that the counterparty risk is the U.S. government, which is backed by bonds and treasuries and all that other crazy stuff, right? But by holding gold, you're not having any counterparty risk. So that's why I would need to see U.S. go down, and then that's when this will go up. So depending on what these two charts will tell me, that's when I'll make a move. But again, I have to look at it on that day of and then kind of make my choice. But at least I have a plan going in there as to what I'm going to do. But that's on the hourly. Oh, sorry, that's on the daily chart. On the hourly chart here, let's just go through 1 hour, and then as you can see, here is a lot more zoomed in, so everything looks extremely big. And again, right, when you get to the hourly and the 5 minute and stuff like that, you're day trading, right? I usually don't go anywhere lower than 1 hour because like I'll give you an example. If you do 5 minutes, you're gonna get whipsawed because look at the volatility of this stuff, right? You can be like, oh man, it's like really low here, right? Yeah, but then it's like really high after 5 minutes, and then it's gonna snap right back, right? Like look at this one, right? You have volatility here, you buy it here, you sell it here. Like unless you're consciously like buy sell every 5 minutes, you're gonna buy here, it's going to go up, and then you go, oh my god, it's going to be so great, and then it's going to drop right back down. So you're going to get whipsawed back and forth. So I usually don't like 5 minute. Again, unless you're a day trader, that's a different course altogether. But I usually just like to look for 1 hour, and I like to go back in time to smooth out some of these lines. So for 4 hours, it will be high, low, higher, low, and then back. And then you notice that, for example, triple support line, which tells me that it's formed a pretty good solid bottom. And 1, 2, 3, 4, 5 points, which are hitting this resistance line, it's compressing into like a triangle or wedge pattern, and it's either going to go up to down, or and also there's also like an equilibrium here as well, because that's what they're trading in, and then you can have a bigger equilibrium outside of that. So once you see it break all the equilibriums, that's when you know, okay, this is for real. And then you have to take a look at volume and make sure that there's follow through, because a lot of times it's just bellies up. Like you can have a breakthrough, but then there's no follow up, and then it just went back. So that the more compressed it is, the more power in terms of going upward or downward, and those are the trades that I like, right? So make sure you take a look at that. and also, you know, take a look at the different indicators, right? So stochastics is my momentum indicator, which tells me that it's right now it's about to be overbought, right? But you have to take a look at different indicators where momentum and also directional. There's many indicators and they do different things, and you have to know when to apply them and when to ignore them. So that's really the 20-minute 50,000 foot of you know, technical analysis as to what I do on every day.
Jeez. All right. It's a lot
Yeah.
of information.
Yeah, I mean that's what I'm saying. Like, you won't get all this in like 10 days or 10 hours of your time. Like when you chart and when you stuff like that and you do the you know, when you do this, that's when you start learning. That's the only way to learn.
You mentioned something about breaking the trend up in terms of buying and selling, and then you said if the volume doesn't match up with it, then it'll probably come. Can you elaborate that? Dumb it down a little bit for me, please?
Yeah, so I'll give you an example where it's like a false breakout. Now you see trying to find an example here where you see this, like this is volume. It just means how many people are buying and selling during this 1 hour period, right?
Okay.
When something jumps up, you want to make sure that, you know, it's jumping up in a way that, look, I'll give you an example. You see the size of this, like this green triangle, or sorry, this candlestick, and this candlestick is pretty much the same, except this one is twice the volume, which means that this one has a, like, if you were to tell me, if I only see this, I'll just take it with a grain of salt, because I need to see more fall through. But when you in succession with more and it increasing, it means that, okay, there's more people coming to buy, right? And vice versa. You know, on the other hand, it can, if you don't have volume, it can be a false breakout. I'll show you another where it looks like a big candle, but maybe it doesn't come with volume. But you know, I think you get the understanding what I'm trying to say here, right? So because
like
if
a larger sample size almost.
Yeah, it's like that, right? Look at this one. This was a really great trade between 23rd and like just one day, right? But if you were to, like, let's just say this one, right? You have no idea this is, like, you have no idea this is coming, right? You're on that day, it's like, yeah, okay, a little bit, but now all of a sudden, boom, there's like 50 million people that's already trending. Okay, now I have to look at it carefully, and I see follow through. There's more and more. And as you can see, volume starts to decrease after the initial load, right? People, by the time you see here, it's like, okay, you see this? There's almost like no volume, right? But this is after hours, so anyway, it continues to go up, but you know, if you take a look at this, it's just not going to follow through, because volume, if you have more volume, it's going to continue to go the way that it's supposed to be, and you have to take a look at all these different indicators to tell you that. But make sure you trade with volume as well on your side, or else it may be a false breakout. Yeah.
All right. Awesome.
Any other questions on technical trading on a 50,000 foot level?
Anyone else?
No, that was good. You answered a lot of questions right there.
Yeah. Yeah, I can also answer, like, you know, some gold company questions, or what you should be looking at. Oh yeah, so yeah, maybe I'll just continue, keep going. I was just plotting gold versus the US dollar, but you can do I also look at things like oh, sorry, you know what, I was looking at this week. How to make this
Sorry, I'm not sure what happened. I think I somehow took it. Can you take it back? Oh, this is weird. Okay, never mind.
You guys can still see my screen, right? Okay.
Yeah. Sorry.
Yeah. So another thing that I like to trade right now, and for those of you guys on that chat thread, that's I've been always talking about it, it's the SPY or SPX, or give me 1 second. So it's the S&P 500, right? So SPX, SPY, SPX 500, they're all really the same thing. But this is basically the barometer for the general stock market, right? So again, I apply the same thing here, where initially for the last couple of days when I was looking at it on a, now again, it's totally different, but again, I'll kind of pull the same kind of methodology, right? So if you take a look at it back in 2000s-ish or whatever, it's continued to go up, go up, go up, steady climb. So that's why it was in a bull market. And then that obviously broke on March. And why? Because it's already failed its lower, the last lower high, right? Or the lower low by just going through it. So as you can see here, the thing is, you can't really look at it on a weekly because it's too fast, right? If you have a long enough time frame, like 10 years, yeah, you can do weeklies. But this has happened maybe 4 or 5, I think like 8 weeks. So it's not too much, because what you've seen here is that it went down and then it's going up. It looks like, again, it looks like it's reaching a high. Now, it can continue to just keep going tomorrow, and then you can't call that a high anymore. What I need to see to make a decision is clear indication like this, right? So like, so you see this, that's a clear indication. That's a top. That's a bottom. That's a bottom. That's a bottom. That's a top. That's a top. But if it hasn't finished it itself yet. It could continue to go up. It could go down. If it go down, then I know this is a top, right? And then that will influence my decision onto a next time frame as to what this is, because right now it's trying to do price discovery and figuring out where it's supposed to go. The market's trying to figure out where to go, so I can't say whether or not it's a bear market or bull market yet, because it's too fast. So that's why I have to go into my my next time frame, right? So on the daily, okay, a little bit more data. Okay, so obviously it's on a daily uptrend, right? So you can tell that it's kind of like a wedge here. But before this happened, this was obviously like this week. But I was looking at it in the last couple of weeks, and I was just mentioning, and again, first of all, I don't like the S&P 500. I think it's going to go down. But I have to kind of just have or park my fundamental hat on and just put that aside, because I'm now a technical hat now, right? So these two have to work together, or else it doesn't paint a good picture. You get, like, for example, like Peter Schiff have been talking about gold and the S&P crashing for 10 years, right? So fundamentally he's right, but the technicals don't tell you that this is the time, right? So it's kind of like the technical will tell you when it's going to be. The fundamental will give you the reason why, right? I'm already convinced that S&P is gonna crash. It's just I just don't know when. It could take like a couple of weeks, it could take months, who knows, right? But one thing's for sure, which is right now we're about like the high, which is about halfway retracement than that of the initial high. If it ever goes back to here, it just means that the market has totally ignored that we have 10-15% unemployment. We have everybody's not going back to work, and that's okay. The stock markets can continue to get pumped up, aka the real economy, which is like you and I, we're in, is totally distorted from the financial economy, which is all this stuff, because people can't eat stocks, right? People still have to eat meat, and people still have to go grocery buying. Like, this does not represent anything, right? Like, you try to tell a guy, why don't you about stocks and the stock market's going up, the guy's unemployed, the guy's not going to buy stocks, right? So it's totally disconnected. But anyway, so that's the fundamental part. But the technical part, if I were to take a look at a daily, looks like it's a wedge. So that's why at this point I was like, okay, if it drops below this, you have a really good case for it. That's the second, like, Jesus coming, that kind of thing, right? But again, the problem is I just don't see enough volume, and that's why, I think Daryl was saying something about, is this a bullish flag or whatever, and I'm like, yeah, that might be the case, because I need you see this when it dropped. Look at this, right? The market didn't really pick it up until like here, right? Look at all these days of low volume where nothing happened, and then all of a sudden you see like do double of this, double of that, and double of this, right? So it kind of like got into reality after like the second day, right, of sell-offs, right? And then it just like quadrupled and whatever, and so people were paying attention. But here I'm seeing a decline, right? A decline in volume just simply means that the direction, it can be interpreted for many different things. One of the things that I interpret is when you have a decline in volume means that the trend that's going into is starting to fade. So when that happens, you should see usually it go the other way. But again, I need to see more evidence. One indicator will not be enough. You need multiple. So look at that. It broke through the wedge, which tells me that, okay, it might go downwards. So you kind of see that there's a little bit, but it's just not in the volume. So, okay. So the case is no longer that's the case. So what does that mean? So I drew more trend lines. Why? Because, you know, it's touched this like the bottom like a couple of times, right? And it looks like it's found a support here. I drew like multiple ones here just in case it drops. But anyway, it looks like when it did that, it's trying to still figure itself out, because you can see here, if you were to kind of draw it out, it depends on which side you're in, right? If you're in the bullish side, you can be, yep, it's bullish. Why? Higher lows, higher highs, higher lows, higher highs, higher lows. And this looks like a lower low. Who knows, right? We're going to see in the next couple of days. But all it's going to do, if I'm bullish, it's just going to continue to keep going. It's going to go lower and respect these two wedges and continue to keep going. That's the bullish case. The bearish case in this is that if it happens, it has to break the last lower low, which is this one. It can't close above it, right? So it has to go this. And then it's lower low against this one, and then lower high against this one, and then lower lows, lower highs, lower. That's what I need to see in order to get the bearish case. But right now I don't see anything except it continue to go up. So I don't know. Maybe it's gonna keep going up until you know, then it's gonna keep going up for a while. But you know, the lines in the sand that I like to see would be in any case. Let me just kind of get rid of all this stuff. Is it looks like it's respecting this trend line 1, 2, 3. This trend line 1, 2, 3, and it's going to keep going. It sounds like, but I also can see, for example, there is a potential top here that needs to break through, and obviously the all-time high, which is like 3,300. So we'll have to see that. And also for those of you guys that do crazy stuff like Fibonacci replacements and stuff like that, you can do. It gives you a little bit more indication of what potentially the support and the resistance are. Some people love this. I personally don't care for it, but you know, I take a look at it as well, because some people do care for it. So if it continues to happen, one possible line is this line at the 61 level from the top, and I can keep going as well. 78%, blah blah blah. I keep going up. So it really just gives you guidelines as to where it can potentially end up. But of course, nothing can tell you that until you're there, right? To see that on a daily, on an hourly level. So that's Fibonacci, and that's kind of like my thing of the S&P. But in summary, it looks like on a daily chart, it's going, it's continue to go bullish, even though it's against all my principles and beliefs. But you know, you can't argue against the market, right? The market will tell you what it is. It doesn't follow anybody's rules, right? Hourly chart continues to confirm that higher low. It looks like it doesn't really count, right? But it looks like it's starting to drop a little bit. But I need to see proof, as in it needs to crater below this before it becomes an hourly bearish signal, which means, and remember, you have to go step by step. Hourly bullish, right now it's like daily bullish, which means that in order to change my thesis, I have to see the hourly bullish as a bearish, which will ultimately drive the 4-hour bearish. I need to see hourly first, 4-hour, right? 4-hour, the line in the sand is here. So if it does not drop through here, it's not going to convince me to say that it's in bearish. And if it's not coming to be bearish, then your daily won't be bearish. So that's how I kind of take a look at it.
Did you learn all this through YouTube videos, books, or combinations?
All of the above. 10 years. I started when I was back in university. I was looking for second income. and I had to think about what I wanted to do. And I was either entrepreneur, real estate. I stuck with this, and I continued to learn every day, nonstop. Even today, I don't stop. You just practice, because it's not predictable. That's why I'm saying it's both an art and a science, and that's the reason why. Because what you think it's going to happen, most likely won't happen, and then you have to react to it. But yeah, a combination of YouTube videos, technical analysis, and there's a couple of books I can recommend to you guys. Alexander Elder, he's probably one of the clearest ones on technical analysis, but it gives you the foundation. And then you have to layer on indicators and volume and all this other stuff, and then you have to learn position sizing, when to get in, when to get out, because they're all different things that are involved in technical trading that need to learn. So yeah. Okay, guys, we're at almost the 50th minute mark. Any other questions? Otherwise, I'm just gonna close it.
Good.
No, man, that was awesome.
Let me just stop the recording for some people that are